Hello, folks. Welcome to weekly chart review for stocks. It's Saturday, April 30th, and I'm going to make this video quite short. There was not really a whole lot of developments. We were just kind of testing the lows that we've seen uh, la earlier on the beginning of the week, and also about a month ago. Um, yeah, not much has really changed. I'll go over both the US 30, which is the Dow Jones Index, and the Nasdaq, just to kind of get um, a clear picture as to what's going to be happening in the short term and hopefully long term if I am correct. So we'll jump in on the index first, and then I'll quickly go over the stocks if there's anything exciting. All right, so first things first. What we're going to do is pop on, well, US 30 is already here, so if you remembered what my color lines mean, that's fantastic. Don't have to go over that again. If you don't, then I recommend popping onto a previous video, but just for a quick little tidbit of information. The green means that the gap closed the following day. Orange means the gap closed within 5 days, and the blue means that the gap eventually closed, but time was kind of irrelevant. All right, and red means that the gaps are still open. So what we see here right now is you could see that this just kind of whipped right down to close that gap from, let me just try to make it as straight as possible, from March 14th, and then it started going back up after hours. So Dow Jones, I don't really see this going much lower. I think we kind of hit our retracement levels as deep as it's ever going to go right now. Just for an example as to what I'm talking about right now, let's go from the most current low, which is February 24th, to the most recent high, which is April, what is that, 21st? Right, we draw that over. Look at the Fibonacci. It wicked off that 786, and that's beautiful because that kind of tells us that that's a very hard rejection zone, and it wants to push higher a little bit sooner than anticipated, right? I thought we'd slowly trickle down, but we really hit it hard Friday. I think these institutions don't want to screw around anymore. They just kind of want to get it all over with. And I'm all happy for it because it's been 6 months of pain. Right? I expect that what we'll do, Monday is really going to give us all the information that we're looking for. If we drop lower, it's going to be kind of detrimental actually to that point because we're going to be seeing lows forming currently right now. They probably drop another 500 points to about 1,000 points. If it drops another, where are we at, 3,300 or 33,000. If we drop to 32,090, well, we're looking at a very serious drop. But I believe that has already played out right here on February 24th. I do not believe we are going to be going lower than that. Again, it's a best guess. It doesn't mean that it's guaranteed. I am very optimistic as to seeing a reversal sometime soon. We've been bleeding in the markets for 6 months at this point, right? And typically when it is kind of a self-inflicted pain, right? Like this isn't a recession that happened because it was like a giant mistake, right? COVID was essentially the reason, and when everything started opening back up, it just a mismanagement from your government officials, which realistically, I mean, if you think as to what they actually do and how they got elected into power, they know nothing of the real world. They just live in a fantasy land and waste all our taxpayer money. But that's neither here nor there. Argument for another time. I would just recommend people that actually have half a brain to be able to do those jobs and have actually done budgets in their lifetime. All right. Right now, we've printed. In the last 2 years, we've printed, or America's printed 30% of the money in its entire existence. So that's a bit problematic. But hey, I mean, why not? Money doesn't really mean anything, right? It's just a piece of paper that used to have some sort of value to it. But now it used to be it's equivalent to a silver note, right? Because when there was a gold standard, it actually meant something. But not again, a time gone by. Nasdaq, what I've seen is this has been going slightly lower each time, so that is a little bit concerning. However, right behind this blue line, the gap was closed, and as you can see, these little dotted lines, there's actually a very thin point of control line that's drawn up from December 2020 to May 2021. And we've actually been, like, I'll flip it on the daily, hopefully we'd be able to see that. Right here in this zone, right? This is where the point of control is formed, right there. And that's exactly where we've been hitting off this entire week, right? So we bounced off it the first time with a sharp move down and then a sharp reversal the day after, followed by kind of a slow bleed back down to that area, but closing right on that line. So yeah, I mean, that gets me a little bit hopeful. Basically, what that means is if, you know, Monday is really going to be the telltale of everything, right? If we if we open and close above this red line, very good rejection, you know, then we're going to be trying to aim higher. If we close below this line, below this red line right here, we're in some doo-doo. You know, the whole idea would be, even if we close below that line, if we drop below these candles here, Nasdaq is going lower, right? So we have a potential, let me do the measurement stick actually. We have a potential, you know, if it drops more than 80, 93, a little lower, sorry. If it drops more than 96 points, we're in trouble. If it goes up, you know, any sort of number, if it basically closes higher than what it closed on Friday, we're in decent shape. You know, the FOMC meeting is going to be talking about increasing interest rates, which is already a projected 0.5%. That's basically been priced into the market from what I understand. So, yeah, time will tell. Monday is really the crucial point. Knowing whether or not the markets are going to go up or down. You know, it's something to watch. I would kind of sit on my hands on that day. Don't really jump in and take any crazy trades. Very bad idea, especially because that's the pinnacle of indecisiveness, I guess, would be Monday, right? And we all need to know where that day ends. And yeah, that's kind of all I have to say about Nasdaq. So let's jump into the stocks very quickly. Oh, we'll do it on my proper chart thing though. All right. So what I've been saying is that as long as, like, as you've seen on the Nasdaq, right? So we've made the previous low on March 15th, where it opened, was about there. Okay. So right now we are lower than we were on March 14th. On April 26th, I guess we dropped lower, but on the actual trading day, it was 29th. So on NASDAQ, we are lower on April 29th than we are on March 15th. However, if the stock in question is higher priced than it was on March 15th, that for me, that is a very positive outlook, meaning that it's likely to rise much quicker than if something is lower than it was on March 15th, and significantly lower, right? So let's go over it now. I'm just going to say higher, you know, if it good to go, or if it's going to drop further. I'm not going to jump into crazy analysis. We've done this already. But this one, it closed higher than its previous, so good chance for Apple to climb quickly. AMC, also potential to climb quickly. You know, did this up already last week, so check those notes. AMD, it'll take a while. Amgen, potential to climb quickly. Amazon, it might take a little while, but it has quite the gaps to fill. That one is done. And now here's a new, where are you? Here's a new gap to kind of, that took its place. So we need to kind of go back to the 2,880 mark, 2,880. So yeah, good potential for it to go up $400 within the next day or so. Yeah, earnings not fantastic, but Amazon isn't going anywhere, let's be honest. Right, Activision. Decent. Where was it on the 15th? Somewhere around here. Yeah, it went lower. It's got gaps to fill, so I think this is going to be dropping. Uh, we'll have to wait and see. BlackRock is lower. I'd bide my time with those. Berkshire Hathaway definitely higher, but this is on say the Dow Jones, right? So that would be on February 24th is when it had its lows. So right now, like it's moving exactly as the Dow is. Like we're rejecting off that white EMA line right now. Very good sign that Berkshire is going to have a strong reversal. Like it's only dropped, it's dropped 10, 11%, 11.17%. Not the worst thing in the world, where you had other ones drop over 50, right? So very conservative drop right there. I would say definite opportunity to be able to snag some at this price. I doubt you're going to be seeing it go lower than that, right? Every pullback that you see is always higher than its last initial low, right? So every single one, right? Pullback higher, pullback higher, pullback higher, pullback higher, pullback higher. So this is the time. Pullback higher. I'm just saying, it's a great opportunity. Cat. Same sort of thing. Great opportunity as well to snag this guy up. But from what I've noticed, retail stocks don't move the same as tech stocks, right? So they have a whole other outlook on them. Construction, I'm not really sure of the industry itself. Just judging based purely on chart reviews, this is looking pretty good. Technical analysis. Costco. It dropped from its 610 peak down to 530, 531. Very good opportunity to jump into this as well. You're not going to be seeing a price come much lower than this in the near future. It's been steadily climbing over the last few years, and it's got nowhere else to go but up. Chevron did a significant pullback, but that's all dependent on oil, right? It's it kind of formed a double top right here. It might take a little while to break through that, so hard to say whether or not this is going to be kind of retracing anytime soon. I am going to stay out of this for now because it's kind of grabbing it near its peak, so I'll avoid that. Disney is like a falling knife right now. It's best to kind of stay out until they sort out their stuff, like I mentioned last week. DocuSign, it's definitely higher than it was on March 15th. That's a great sign. To be honest, I do not believe we're going to be seeing go much lower than it is right now. This is probably the bottom. And again, speculative, right? Like the actual bottom that we've seen was about $71, and right now it's at 80. So we're splitting hairs at this point. I truly don't believe that we're going to go much deeper. Let's do a fib just for fun. And our Fibonacci is right at the 786 exactly. DocuSign, a great potential for this decline. This Dow, it's been going. It actually broke through structure right there, so that's a good sign. EA. Not yet. It's no, I would avoid it. eBay, good sign. It's higher than it was on March 14th. That's good. Let me zoom in so it'll be clearer. We don't really need the entire years of information. Facebook. Earnings shot it up, so yes, that does make it higher than March 15th now. Good potential as well. Lots going for Facebook. Not a huge fan of the owner of it, but hey, you know what? The platform is still used by everybody and the most consistent, so it is what it is. What were earnings? 27 billion, so slightly short, but they went up on shares, so good. All right. GameStop, funny enough, right? I mean, we kind of hit a peak already, so we're going to be dropping. How far it's going to drop, though, I don't believe it's going to be much further than it is right now. we've kind of seen this little gap close on its move upwards. Man, it's so hard to say. I think this might be the only time it kind of breaks structure and goes higher than its previous high. Yeah, we'll see. I'm not going to jump in on GameStop anyway. It's way too risky. But Google, yeah, this is definitely lower than March 15th. But Google's not going anywhere, guys. Even though they kind of short on their revenue. Oh no, they missed it by 44 million. 0.07%. It's crazy how $44 million is such a tiny fraction, right? And oh look, they estimated it didn't go up that extra dollar. I mean, guys, do we really think Google's going to drop the ball that hard? It's got a stock split coming up right here anyway, right? 20 to 1. Like, we know that usually for stock splits, the price is driven up so that people can get the most value before split happens, right? It's been proven to happen several times over. This is going to be no different because it's this low. Personally, I would see this kind of as a bargain. Earnings really helped it tank, but you could see where it's resisting off that fib channel, right? It bounced off that purple. Now it's sitting around that gold. Yeah, I have a strong inclination that this is going to go up probably around the 2800s within a week, maybe two. Goldman Sachs, a little bit lower. That's not promising. I'd stay out of that for now. Home Depot, where was it? February 24th. It's kind of around the same area. My only issue with Home Depot, like, it's just been consolidating. It's not really too choppy, right? Not a huge fan of it kind of stagnating around this area. But considering how deep the Dow dropped, this only dropped $6, right? So for the Dow to drop however much it was, like this dropped 2%, or where is it? 3.64 it says. Still not the worst thing in the world. Could have been a lot worse on other stocks. Honeywell, surprisingly, is one of the only in profit. I guess their earnings, one of the few that actually shot up. All right. So yeah, everything else you see is pretty much red except for like two stocks. Imagine this went up 5%. That's insane. IBM, good opportunity. Like, I'll move this back here because we've closed that gap. All right, so now we have another one that needs to be filled. So very likely it'll just drop another $2 before going back up. But IBM definitely higher than its February 24th or March. No, it's on the NYSE. So yeah, definitely higher than February 24th. It's good to go. Intel, eek, that's not great, right? It's lower than its previous lows, so not great. Intuit, lower than previous lows. J&J, higher, that's good to go. Merck and the company. Check it out. See, remember when I drew this way back when? It closed the gap. I called it. Surprise, surprise. Microsoft. Yeah, I mean, it had earnings, it did its thing, but it's still higher than on, just barely. It's about the same. Netflix, this has been the worst thing I've ever seen. Big gaps to fill even here. We'll see how long that takes. Like, this is going to be, a very long, steep climb. Consumers have had enough. Neo, good sign. It's higher than its previous low. Nike, higher than its previous low. Nvidia, yikes, not great. Pinterest, lower, not great. PayPal, lower, not great. Although, I'm still a little optimistic on PayPal. Like, there's lots of gaps to fill still. I have no doubt that that's going to happen. It might take a little while, but Roblox, yeah, stay out. Roku, not great. right? Same sort of pattern as PayPal and Pinterest. Spotify, definitely lower. Tesla, definitely higher. That's a very good sign, right? March 15th was here. February 24th was there, right? Another falling blade. But check it out. Like, we are significantly higher on that particular stock. So that's a very good sign. Yeah, I wouldn't concern myself a whole lot for them. I believe that these guys will be climbing overall. They haven't been making new highs. However, I think that's going to be changing in the near future. Right, so, and then the lowest point right there. So as you can see where it's been rejecting off of, good signs. Okay. Visa, decent earnings, kind of shot it up, but Visa consolidates more than anything else because they pay dividends. Walgreen, lower, not great. Walmart, significantly higher. Lots of potential here, actually. It's making new highs. It is. It actually broke through previous highs, so that's a little surprising, especially when everything's tanking. Walmart is doing the best. Good for them. Exxon, it's definitely higher than on the 24th, so a good sign. It's climbing a little bit more steadily than Chevron. And just for fun, let's look at oil. Oil is kind of choppy. It's been around the $14 per barrel range, peaking at about 109 and as low as 92 and change. Yeah, so like 16 and a half a barrel for the last month, I want to say. Yeah, been about a month. And yeah, that's kind of it. That's what I've seen. The key is going to be Nasdaq, where we open and closed on Monday, and that's really going to be the crucial point, right? If we break through, like I'll jump back on there, but if we break through that zone on right here, if we close lower, trouble. If we close higher, saving grace, we could be looking pretty good. But I feel that we might just be seeing a little bit of this for the next few days until the interest rates actually come out, and then that, right? So the reason why is because typical large institutions and hedge funds, they already know interest rates are going up. They priced it in with the drop that already happened. Okay? So that's it for chart review on Saturday, April 30th. Please subscribe, give the channel, hit your notifications so you know when I have new videos coming out, even on the how-tos. I did a recent how-to on the Fibonacci channel, so you can set it up just how I have it. And yeah, like the video, subscribe, and I'll see you next time. Thank you very much.